What's happening, everybody? Welcome to the Flow Show. We had last week off. I hope you didn't miss us. But I'm your boy, Sean McLaughlin. That's your other boy, Steve Straza. Straza, how was your Olympic weekend?
I missed us last week.
I missed us too. I was bummed, actually.
Like you, and it sounds like a lot of people, I'm enjoying the Olympic coverage so much.
We were talking before we went on the air here. You and I are both in agreement that we loved the opening ceremonies. There was a little weirdness in the middle that we have mixed feelings about, but the rest of it was awesome,
Dude,
right?
I think people from France are a little bit weird. That little thing in the middle was bizarre. But yeah, it was beautiful. And who doesn't have fun? Like when you watch them and they're all in their boats and you see how many athletes every country has, that's my favorite part. It's the best.
Yeah, I thought the Celine Dion thing at the end. I mean, me and my wife were fighting back tears, man. That was beautiful.
Yep. Yep.
Beautiful.
Yeah. So it's been good. Let's go Team USA. I just ordered my Charles Barkley 1992 Dream Team jersey. So
I love it. I love it. All right. Well, we could talk Olympics. You're probably not here for our hot Olympic takes, so maybe we'll cool it on that. This is the Flow Show. So what we do here, me and Straza, we put our heads together on some potential trades. Straza's got some charts he's got in mind, some sectors, some themes that are top of mind, and then we go down the rabbit hole to see if there's some options trades we can make, and we kind of build the trade together. That's what we do here. When we like to share our process with you guys, so that you can see how we do this. So with that in mind, Straza, what are you thinking right now? Where are you looking?
So, I was telling Sean off air before we came on. I don't know if I have like any, real idea today. It's not that I don't have ideas. It's you don't put a trade on every day, right? Real traders
Right.
are not putting trades on every day. In fact, the better that you are, you probably find yourself sitting on your hands more and more and more over the years, right? Would you agree with that? So,
Absolutely. We don't have a mandate to trade every day. No one tells us we have to trade every day. And it's a good policy to not trade every day.
so
And
with
some days
that,
we trade a lot. It just depends.
absolutely. And we have been, right? So that's kind of what got us here. So, like, with that in mind, myself, and I know you as well, we're very long right now. We have lots of long positions on, right? A lot of
Yep.
them are working. A lot of the mega cap tech ones stopped working a couple weeks ago. And I can't help but look. So, this is the NASDAQ 100. I'm zooming all the way out to the beginning of last year. This is the 1 day rate of change up here up top. So, I just want to look at down days. So, let's just widen this out a little bit. That's the 1 day rate of change. And then we have the RSI 14 down below here. Last time we were this oversold, Sean. So I'm looking at the RSI 14 now. This was back in April. It was a great time to get involved, right? Sell some puts. That worked all day. The nature of the selling in big cap tech, though, has changed, in my opinion.
I
They are
agree.
they are selling every rip. It's happening again just out here this morning. It's 11:40. We had a nice little rally. We opened up green, and they're slamming them again. I want this to stabilize before we just step in and sell puts. Sean, I got blown out. I sold puts too early last week. AMD and Dell. I'm sitting there. I was at the barber. Positions moving against me. I'm like, Dell's not going to be down 8% in a day. It was. Like they're selling these things differently than we've seen during corrective waves in the past. That doesn't mean it's over. That doesn't mean it's a peak for tech, but it does kind of mean to me, I'm happy to wait and see what happens. So that's kind of where my
Yep.
head is at on the put selling. I don't know.
No, listen, I agree with you. I think there has been a change of character in the market. And I don't want to get into politics because it's not political, but I feel like with the change in on the Democratic side, with Biden stepping down and Kamala Harris coming in, there's uncertainty there. Is Kamala going to be the real candidate? Is there a new candidate going to come out of the Democratic National Convention in August in Chicago? There's uncertainty. And the market doesn't like uncertainty, right? I think it was universally accepted around the country that we hated both candidates, whether it was Trump or Biden.
But we knew
Universally, they
but
were
we knew
both
them.
bad candidates. But from a market perspective, they were known candidates, right? We kind of knew what we were getting. So the market was not really all that worried about it. But now that we've got a new wrinkle, who knows what's going to happen? You talked about it on the morning show this morning. There's policy indications that are coming along that affect more than just crypto. I know you were talking about crypto, but talks about, I mean, policy affects everything, right? And when we have a big unknown out there, like who knows what's going to happen on the Democratic side? Is Kamala going to be the actual
Wait till
person that leads the charge? I don't know, maybe. And if she does, she's an unknown, really. I mean, yes, she's been vice president, but we don't know what a presidency under Kamala Harris looks like. So I'm just
yeah.
saying all that as a reason why the market is pulling back, and we're seeing profit taking in the big caps, where there's been a lot of money made in the last year and a half or so. So it's not surprising, but I think that's why we're seeing a change of character, Straza. What do you think about that?
I don't disagree, right? Because it's funny you say that because these are the worst, these are the best worst candidates the market has ever had. Like you said, Trump, Biden, whatever you think about them, they were fantastic for the market. That situation was great for the market, I thought, right? And now that's gone. And you're right, it's happened over the past 2 or 3 weeks. Well, the nature of the sell-offs or even the tape, just from day to day, the way that sellers keep taking control of the market and we're getting these big red candles, the nature of the way that they're selling these stocks has changed. I think there continues to be a ton of opportunities. Small caps, the regional banks, the home builders, all the stuff that's working keeps working, but they're extended, right? So I don't
Right.
want to jump in and get long calls in the home builders right now either after the couple of weeks that they've had. So I'm kind of, I don't know. Is there something that you could do in this kind of a market from an option strategy standpoint? Or is it best to just wait?
That's a nice segue. Gene, if you don't mind, can you flip up my chart real quick? I got a chart of VIX up right here, and I think the VIX is telling the story that you and I or the VIX is showing the story that you and I are telling, right?
Yeah.
We have the Federal Reserve this week, perhaps going to cut rates. I don't think they're going to. I don't think you think they're going to.
No.
But the way we see VIX rising over the last 2 weeks, I don't think that is Federal Reserve related. I think it's the uncertainty that's playing out in the political landscape. And so when you see a lot of uncertainty, it definitely shows up in the VIX. And not that the VIX at 17 is at an alarmingly high level, but it is the highest level we've been in all summer. So that is notable, right? That is notable that there is fear there. There is premium there. And so as an options trader, if I want to put a trade on, I'm thinking, without, obviously every trade has to be evaluated on its own merits, of course. But before I even look at any trade Straza, my hunch is that I probably want to be selling premium here. I certainly don't want to be buying calls to get long, I don't think, because I think they'll be more expensive than they need to be. But I think selling premium, maybe some delta neutral trades, Straza, maybe an ETF index that is exhibiting some higher volatility right now, or maybe selling a put at a big cap name that has already come into some support and is bouncing off it. We did that on Berkshire Hathaway last week. That type of trade, I think that's where my head's at right now.
I think you could probably pick your spots in tech. And you're right about the VIX too, right? Because you know how we know it's not the Fed? Because every time Powell's come on and said anything, he was in front of Capitol Hill a couple of weeks ago. Then we had the CPI, right? That's Fed stuff too, when inflation data comes out. The market's been rallying. Fed stuff, inflation stuff has been a tailwind whenever it hits. There's something else that I think is driving this elevated volatility. Let's just look at some charts, Sean, and here are some ideas. Tell me if any of this really tickles your fancy. This is something like, so AMD, right? I was looking at this last week. Okay, this is something that we would collect some premium in, right? Sell the puts here. Like we're below the pivot lows. We're red again today. Big upper wick, right? It means sellers, taking control again here midday. You got to wait on something like this. You could sell the puts on a little hook higher on something like this. If this candle looked differently, like right now, and we were trading at the highs from this morning, maybe I would be here saying, all right, let's sell the puts in it, right? But it doesn't look like that. Dell is another one. Clean level, but you need a green candle first, right? We got this little gap here. Okay. Maybe we go down to fill it. I don't know. And we'll be talking about selling puts here in a few weeks. Have no idea. But we need some sort of evidence, but tradable low. Micron is another one that I like a lot, Sean. I mean, this is the same pattern that we've been going back to all year and saying, hey, these are probably not tops. I don't know if you want to step in right now and make that call.
Right. Of the three that you just mentioned, I'm going to strike Dell and AMD out of the conversation for two reasons. One, we haven't had that green candle, as you mentioned, but also both of them announce earnings tomorrow.
Yep, absolutely.
So we're not putting trades on there.
Oh, no.
Micron, however, did get earnings out of the way back in on June 24th. So we've got that out of the way. The chart looks a little better. I think I would rather get involved if we got above 111 though.
Yeah. And you know what else? Another thing, if you want to flip it back to my screen real quick to make this point, Gene, I don't like selling puts in things that are getting oversold, Sean, right? It doesn't mean it's the end of the uptrend. It doesn't mean that, price of Micron's going to peak out here and roll over. But in the best uptrends, in the strongest bull markets, RSI doesn't get oversold. It hits, low readings of around the 40s. We hit a reading below 30 on Friday in Micron. I feel a lot better. Here's an example. We loved selling the puts in DR Horton weeks ago, right, Sean? This is the momentum profile that you want when you're selling puts. Look at all the corrective waves here. They bring RSI down to, I don't know, 35. That's really what you want to see when you're stepping in and selling puts and betting on something not being a top.
Yeah. All right. Well, okay. So those trades are no go for us. What about something in like the retail sector? How do you feel about that? So, like, got anything that's showing good signs of support and that maybe has some good elevated premium that we could sell?
I think Amazon is still one of the cleanest, right? Like I think you can go out and be long Amazon calls.
Amazon, that one too is going to have earnings coming up here pretty soon. Let me see.
Yeah.
They have earnings on the 1st, so this week.
Yeah.
I mean, okay, let's play devil's advocate here. If one wanted to be aggressive in Amazon, okay, I mean, look, it's one of those names that if Amazon misses and disappoints the street, are they going to get cut in half? No. So let's just look. I'm not saying I want to do this trade strategy, but let's just look here. If I go into September options and we look at like the 25 delta puts in September, that's the 170 put strike. Amazon had a little, a moment back in what was that, early May or late April, where it traded around that level 170 for one day. It has a weird outlier candle. You see that on your chart?
Well, island reversal. Yeah.
Yeah. But other than that, Amazon, if you X that weird day out, Amazon hasn't been below 170 since February. So again, I would categorize this Straza as a aggressive high risk trade.
This is one I would do it in, Sean. We did this in Apple earlier in the year. You typically don't want to be short puts into earnings, but Amazon, you shouldn't get too much action.
And we could get these puts, these 170 puts, we could get them for about 460 right now. So that means you're basically down to 165 is, you could potentially win as long as the stock stays above 165 from now until expiration.
That's pretty good.
It's not terrible.
No, I kind of like that.
I'm still gonna classify it as a risky trade, Straza.
Yeah.
Because I mean, Amazon maybe could trade down to 155 in a disaster situation. But even if that happens, are we getting hurt that bad in the puts?
So Sean, that would be a 10% move. And guess what? Amazon's already down 10% right now from its highs of just a few weeks ago. If you look at that little wave with the island, that little corrective wave back in, I guess it was April, that was about a 10% move. I don't know. In other words, what I'm saying is I think the selling here is pretty extended to the downside.
All right. Look,
I like this.
I like this trade, but I'm going to put a caveat on it. This trade is not for everybody, right? Yeah. This is a higher risk trade heading into earnings. We don't make a habit of selling premium and selling puts ahead of earnings.
No, it's really bad. You really shouldn't do it.
Well, let me say this. If you like the trade, but the trade scares you, maybe you do a put spread. You sell the 170 puts and maybe you buy the 150s just kind of as a disaster hedge for $1.25. You're still getting 340 in credit. It's not bad. That's not bad.
I like it. I also look, first of all, you got a key VWAP coming in from the gap high in Q1. that has literally put a cap on sell-offs like 3 or 4 times this year already. I also think, Sean, Amazon is Mag 7, it's mega cap tech, but this isn't like the AI trade. Right? It's the AI names. Go look at the super micros, the semiconductor names. The AI stuff, you're seeing some strong profit taking in over the past few weeks. Amazon, I think, is different. Amazon's online retail. I don't think it's part of the AI trade. I think it's a little bit different. So I think it's safer. Am I just trying to explain away the risk?
No,
Right.
another reason why I like selling puts as a bullish bet on Amazon versus buying calls is, I don't know if you see it on your chart, Straza, but I don't know what's going on at that 200 level, but that was a wall at 200. We had, I don't know, 1, 2, 3, 4, 5, 6, 7 straight trading days where Amazon touched 200 and was rejected.
Yep.
I mean, I don't know what's going on there. That's suspicious to me, but so that means I don't necessarily want to be aggressively long this name because I feel like we're just going to get back to 200 and hit that wall again.
I agree.
But we can make money on a short put trade for sure.
I'm going to put this one on. I'm a fan.
All right. Well, there you go, folks. There's me and Straza coming up with an idea. I'm going to categorize it as a high risk trade, as I've said numerous times already. If you don't like selling naked puts at the 170 strike in September, you could buy 150 puts further out of the money to define your risk and just protect yourself against a disaster. Changes the math a little bit, but we could still both win in that trade. I like it, Straza. I think I may put it on too. I think you've convinced me.
Yeah. I think this is a safe way to sell puts. We're going with the big cap here. We have, very clean support levels. We're already down 10%. Let's do it.
Yeah. All right. So there you go, folks. That's our trade this week in the Flow Show. We're shorting Amazon 170 puts in September. We like the risk reward. We think the downside, the worst of it's already happened. We don't know what's going to happen out of earnings, but do we think Amazon's going to trade below 165 following earnings? I think the odds are pretty low of that. So that's why we're getting paid to sell puts here. All right. I think we did some good here, Straza. We came in thinking we weren't going to find a trade, but look, we found something.
We always figure something out, don't we?
All right. He's Steve Straza. I'm Sean McLaughlin. Thanks for tuning into the Flow Show. We'll do it again next week. And from now until then, go USA.
Yes. Bye, everybody.